Hi, Assalamualaikum. Today, we would like to present about the short-term financing regarding to the assignment of financial management. Before we start, let me introduce the presenters. The first presenter will be Mieza Irdina about concept of short-term financing. Second will be Fatin Nadzirah about the type of short-term financing. Third will be Sharifah Nurbatrisyia Uzma about the sources of short-term financing from bank. Fourth will be Hidayah about the process and procedure of short-term financing. And last will be the Siti and Hafizah also about the process and procedure of short-term financing.
Okay, so I'm going to talk about concept of short-term financing. Short-term finance is referring to finance that needed for a small or short period, normally less than 1 year. In business world, it is also known as working capital financing. This financing is usually needed because of uneven flow of cash into the business, for example, seasonal pattern business. In most cases, this financing method is usually used to finance the current such as inventories and account receivable.
Types of short-term financing. There are two types of short-term financing, which is unsecured and secured. Unsecured short-term financing, including all sources that have as their security only the lender's faith in the ability of the borrower to repay the funds when due. An unsecured borrower does not have to pledge a specific asset as security. The three main types of unsecured short-term financings are trade credits, bank loans, and commercial paper. Secured short-term financing requires the borrower to pledge specific asset as collateral or security. The secured lender can legally take the collateral if the borrower does not repay the loan. Commercial bank and commercial finance companies are the main sources of secured short-term loan to business.
Next, we have three sources of short-term financing from bank. Firstly, we have trade credit. Trade credit is when us or a company buy goods or services immediately and make the payment later. I give you an example. A shoe store. They buy a bunch of shoelaces at one time and pay it later, and of course the supplier of the shoelace itself will create an invoice for the shoe store and state the terms such as 2/10, which means that if they pay within the first 10 days, they will get a 2% discount, and 60 net or 30 net means that how many days that the store agreed to pay it back fully. So if the supplier state that 30 net means that the customer have to pay it back fully within 30 days. Next, we have a commercial paper. In global financial market, commercial paper is an unsecured promissory note with a fixed maturity of rarely more than 270 days. It is also a money market security that be sold by a large company or a firm to obtain funds to meet their short-term debts obligation, such as payroll, and is backed only by a issuing bank or a company promise to pay the fixed amount on the maturity date specified on the note. Lastly, we have a short-term bank loan, which is a type of loan that is obtained financial from bank to support a temporary personal need or business capital needs, and it is called as a credit. It involves repaying the principal amount with interest by given due date, usually within a year from getting the loan. Also, this loan is suitable for small businesses or a startups businesses that are not yet eligible for a credit line from a bank. It is also suitable not only for businesses but also for individuals who find themselves with a temporarily sudden cash flow issue.
And today I would like to present regarding on the process and the procedure of short-term financing. So firstly, we have to check your credit score. It is based on your employer identification number and also your credit history. The bank will use this information to decide whether the loan is rejectable or acceptable and the rate. So secondly is to prepare your company financial statement, because the banker want to look at your profit or loss statement as well as any other data that will prove you were able to repay the loan. Thirdly is to prepare your loan package and give the package to the lender to give them a briefly idea regarding your company. your ability to pay and what you plan to do with the money. So this written proposal should include a basic information regarding your company, your business plan, a briefly description about your products, a biography regarding your key player in the company, and also the market information about your industry.
Fourthly, you can apply your business credit card. You can apply it through internet or phone, and after that, you will receive an answer in a few hours or minutes. This is good for small purchases, but your limit may not be enough to cover your expenses. And lastly, talk to your bank about loan or line of credit. Give the loan specialist your loan package and fill out any formal application required by the bank.
That's all from us. Thank you and have a nice day.